Hey everyone, and thanks for jumping back into the Cryptoverse. Today, we're going to talk about Bitcoin, but in the context of inflation now year over year at 9.1%. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up. Check out the sale on intothecryptoverse.com. That sale will end today. So today's the last day to sign up if you want to lock in the low rate. And you'll get access to the website with all the charts that we talk about, as well as a lot of other things. So check it out. And let's go ahead and jump in. So inflation came in today at 9.1% year over year. And just to briefly look at that, I mean, currently this chart is still showing 8.6%. It just hasn't quite updated yet. But 9.1% is a fairly nice jump there, especially with consensus. We did a video just a day or two ago saying that consensus last month was 8.3, and then the actual number ended up being 8.6. This month, consensus was 8.8. The actual number ended up being 9.1. So perhaps we're seeing a pattern here. But really, one of the things that we continue to talk about, and is sort of beyond all the indicators and stuff that we have, but it's also simply looking at things like inflation and saying, well, what have the generations of investors, the prior generation of investors, what did they learn when they were in a very high inflationary period? And, simply put, I mean, they learned the lesson that the stock market really did not end, the bear market was not over until inflation peaked. Now it begs the question, well, is this the peak in inflation at 9.1% year over year? I know some analysts think so, but a lot of analysts also said that we topped last month, or we topped in March or April. So the thing that I keep coming back to is looking at some of the time frames for some of the prior surges in inflation to try to get a better handle on what are some reasonable time frames, right? Like, is it reasonable to assume that it's peaked, or could it drag on a bit? Some of the things that you could argue are somewhat promising signs are oil is back down below $100. And I do think the real estate market is at least in housing sales is starting to kind of roll over a bit. There's an increase in listings. Inventory is higher. There's also an increase in the number of houses where people are dropping their prices because they're getting scared that they maybe missed the top, and now the prices are going back down. And obviously that's being somewhat affected by, or largely affected by, these the rising interest rates by the Fed. Therefore, mortgage rates are much higher. With all that said, I mean, things can quickly change. I mean, oil could be back above $100 by next week, and it doesn't necessarily mean it's going to have a huge effect on it in the short term. I do imagine it is a lagging indicator to some degree. You have to think back to where we were a year ago, not just where we were last month, right? You think back to where we were, in fact, a year ago, and maybe we can actually go do that, and we'll see, where was oil a year ago? So in July of 2021. So in July of 2021, you can see oil was, down at around $72. So yeah, I mean, it's certainly true that it coming down recently will in fact help, but it's also been sort of chopping in this range for a while. And despite that, chopping up and down, inflation has been continuing to go higher, right? Year over year, it has been continuing to go higher. Of course, it makes up a lot more than just oil, right? I mean, this is not the thing that controls inflation by itself. So, I look at this inflation chart, say, well, what are time frames that we would be looking at? And before I get into that, I want to overlay. Well, actually, maybe I'll do this first, and then we'll overlay the stock market again, and then talk about how ultimately it comes back to Bitcoin. But I look at these, this inflation chart, and I say, well, there were some impulsive rallies by inflation. Maybe rally is not the right word, but here you can see it really started to move up starting in July of 72 is where it sort of hit that local bottom. You could maybe say equate that to May of 2020 or something over here. But interestingly, this went up and it did not peak until December of 74, right? December of 74. So it essentially took about 30 months or so, plus or minus a month or two, right? About 30 months or so for inflation to peak. Now, we actually had a secondary peak later on. We'll talk about that in a little bit. But it took about 30 months for inflation to ultimately peak. If we were to measure this from the local bottom there in April or May or June, so let's say June of 2020, you can see that it's currently been about 23 months out or so, right? 23 months out. Another 7 months, if it's going to be, say, 30 months, would put us out in early 2023. There was also an impulsive rally in inflation that really started here in the late 30s, and it did not peak until about 43 months later. So you kind of have two separate periods here, one 30 months, one 43 months. We're currently looking at around 23 months from that local bottom. Um, and I look at these things and it constantly reminds me when I see everyone constantly calling for the top. I have to imagine there were plenty of people back here that were calling for the top with inflation like every single month. And then finally it eventually ended up happening. Um, and then we were finally like we could actually finally see the other side. So I don't want I think it's kind of a silly game to get into to constantly try and call the exact top. We'd like to see a couple months in a row of inflation coming back down to start to get a little bit more optimistic. I mean, we sometimes have had a period, a month or so, where it goes down, but it didn't mean a thing because it just ultimately kept going higher. So I look at something like this and say, well, it's always possible that inflation has peaked, right? And I guess we actually are at 24 months now because this most recent month is not updated. But I mean, it's certainly always possible that inflation has peaked. But in the same way that people have been calling for the peak for every single month for the entire year, basically, um, you could easily look back on 6 months and just see this continuing to go much higher. So I look at this and what I do, because I wasn't an investor back during this period of time over here. I wasn't even alive. I go look at the S&P 500 and I say, well, what was the S&P 500 doing back over here? And that could probably give us some insight into, yet again, how Bitcoin might behave. Would it not? Um, and perhaps what I'll do is I'll go ahead and create that new scale. And then I'll switch this over to a logarithmic scale as well. So what we're talking about in terms of these inflationary periods, and we can talk about a potential inflationary decade as well, is that you can see that in that first run of inflation where it went up to these similar levels, you can see again the blue line is the S&P. Inflation peaked when the S&P bottomed right around when inflation peaked. Okay, that is the thing I think that's important. And the reason why this is important is because, and you can kind of see it today, right? Like the Fed's mandate is not to protect your portfolio, right? Despite whatever other people might have you believing and that they can't let something happen. No, they can, and they've done it before. They could easily continue raising interest rates, and it's likely what they're going to do. I do think they will continue raising interest rates. I do not think that the Fed is about to pivot. And when inflation tops, then the Fed can pivot. So once inflation has peaked and then the Fed actually sees the data where inflation's actually starting to come back down, then and only then will they likely pivot. Only then. They probably will not do it ahead of that. No matter, I just don't see it happening. A lot of people say, well, you don't know the Fed. They pivot all the time. I also think from some perspective, everyone's sort of used to this quantitative easing period where they just print money constantly and it's a fairly loose monetary policy. If you look at things like you can go look at some other metrics like their balance sheet and whatnot, and ultimately see that their balance sheet is ultimately it's going down now, right? After such a long period of time, it's finally going down. And I believe, you think you can kind of see it here, where it's finally starting to curl over here. And then the question becomes, well, how far down is it going to go before they ultimately have to pivot? It's a tough question to ask, but my response is long enough, right? Long enough until inflation gets under control, right? So we sort of go back to the idea that, well, and we can also make the same exact comparison, a few decades before that during that first peak of inflation and see that is exactly where the S&P bottomed, right? When inflation peaked on the first peak. And furthermore, during the second peak of inflation, because these were both inflationary decades, the first peak marked the bottom, okay? Here, it marked the bottom. The second peak didn't really mark much of anything, right? At that point, you could argue that people were still sort of not doing that well in the stock market when you account for inflation, but at least the stock market was in fact heading higher. So it was sort of like a consolation prize. So I look at this like an opportunity, like a generational opportunity for investors to really get strong positions in the market when inflation peaks. Okay, and I mean it doesn't have to be one of those fancy things where you constantly try to time it. Even people that waited for confirmation that inflation had peaked for a few months, you still would have gotten in at a relatively good price, right? I mean, like, even if you didn't time the exact bottom, it's still, what came after it was still very attractive, right? It was a very attractive thing finally came once inflation actually peaked. And one thing that we've noticed with Bitcoin is that it very much is tied to, I mean, like the stock market, right? It's very much tied to the S&P 500, to tech stocks. If you go up and pull, say, if you compare the Nasdaq to Bitcoin, and let me go ahead and pin this to a new scale so we can again make those comparisons, you can see fairly clearly that the Nasdaq and Bitcoin are highly correlated right now. That doesn't mean they've always been correlated, and it doesn't mean they always will be correlated. But during this period right now, Bitcoin and the stock market overall is highly correlated, and especially highly correlated to tech stocks. Okay, so with that in mind, right? With that in mind, that the Nasdaq and Bitcoin are highly correlated, and with also the thing in mind that the S&P is likely not going to bottom until inflation peaks. I think it's safe to assume that we have plenty of time. Like, you have time, and you don't necessarily have to time the bottom to be successful. You just need to have a strategy to sort of slowly move into the market during a period where you think we're close to inflation peaking, whether you think that's already happened or whether you think, the time to start is in a couple months or in 6 months. I mean, of course, that's up to you, but I'm just trying to show you that inflation is something that we cannot simply dismiss because some indicator says so. Okay, inflation is a it's something that can easily affect markets in ways that people haven't seen in a while because it just hasn't been a problem in a while. The last time inflation was this high was back in the early 80s. So to say that, well, the stock market has to be at a local bottom, or whatever, just simply because of a few indicators, sort of ignores the macro, right? Like, it's sort of saying, well, I'm going to take the indicator over the macro. But I'm here to say, I mean, I do think the macro is a very important part of this. And it's an important component to everything. And to say, look, there have been plenty of investors who learned the hard way that the S&P still had a lot of selling pressure up until inflation finally peaked. And again, the reason that's the case is because it allows the Fed to pivot. Now we're going to be wondering, okay, well, at the next meeting, is it going to be, 25 basis points, 50, 75, or 100? My guess is it going to be at least 75. My guess. My guess says at least 75, probably no higher than 100. So, somewhere between 75 to 100 basis points is likely how much they're going to raise interest rates. If you go look at, why don't we go ahead and pull up interest rates so we can kind of see where that currently is. And you can see right here, interest rates, and I can go ahead and remove the S&P from this one because that's not really as relevant to what I want to talk about right here. If you look at interest rates right now, you can see they are going up quite quickly at a pace we haven't seen in quite some time. Now, if we get a 75 basis point hike, it's going to basically get it up to that same level that we were at in late 2018 or early 2019. Okay, and I doubt they're going to stop there because I doubt inflation is going to be fully under control even in the next month or two. One thing you could argue that is, if this is the peak for inflation, which is still a good chance that it's not, but if it is, then the Fed would still likely need to see, a few months of inflation coming back down, right, before they would actually pivot, right? Now, how does this all come back to Bitcoin? Well, at the end of the day, we said before, Bitcoin is highly correlated to the stock market, especially during a phase like we're in right now, a very risk-off time, and cash does in fact remain king. And so then ultimately, the way I think we look at it is we say, well, we're currently about halfway through 2022, right? About halfway. And we know that in less than 2 years, Bitcoin will have another halving. I also think it's highly likely that inflation will peak again within the next 2 years, at least a local top. It doesn't mean that it can't go up higher later in this decade, just like it did in the 70s and like it did in the 40s. It doesn't mean we can't have an inflationary decade where it goes up later on again. But in terms of looking for a macro bottom, that's what we're currently looking for. That's what we're in search of. And I think the way we find it is really keeping an eye on inflation. It should be at least tied with the most important indicator you're looking at right now, I think. Just because I think it really don't fight the Fed, right? And if you're going against the Fed, it's not really a battle that I want to fight myself. So I just look at it and say, well, I have to understand the Fed's motives and what their resolve is, and I think they've made it fairly clear they are going to continue raising interest rates into a slowing economy because it is their mandate, to get inflation under control. Where might they finally pivot? Also, I mean, if of course, because a lot of people assume we're already in a recession. I assume we're already in a recession. They haven't actually officially announced it yet, of course, but um, if layoffs really start to see a huge uptick in layoffs, and that's also something that the Fed wants to keep a close eye on. At some point, they're gonna break something more than likely, and at that point, they will likely be forced to pivot. Okay, um, but I still think we still have many more months of this period before we're necessarily going to break something. So um, I look at it and say, you know what, we have the rest of 2022. They'll likely pivot sometime. My guess is in 2023. I doubt they're going to pivot this year. They might slow down the interest rate hikes, but I don't think they're necessarily going to go and start cutting them this year. I highly doubt it. So I'd say they'll probably pivot in 2023, and if they don't, very likely early 2024, just in time for the next Bitcoin halving. So I mean, I think it's important to just sort of recognize that with Bitcoin, what I look at when I look at this this overall chart is I say, you know what, after every bear market for Bitcoin, we usually have a reaccumulation phase where it goes kind of sideways for a while, right? You can kind of see that here, you can kind of see it here as well, and to a lesser extent over here. But you have this sort of accumulation phase that lasts for a while, and I look at that and I say, well, I would argue that there's likely a good chance that that the Bitcoin is going to have some type of reaccumulation phase in this range, right, where you'll have plenty of time to get your positions before the next bull market. Now, that's what my gut tells me. I could be wrong, but that's what sort of my gut tells me, is that we're going to spend some time playing in the sandbox for a while before we gear up for the next Bitcoin halving. And hopefully by that point, inflation's coming back down and the Fed has pivoted, and we're back in business in that sense. But I would say, I think we have plenty of time. I look at these things over here, both the 2014 bear market and the 2018 bear market, where the macro wasn't as bad. And it still shows you that we still had plenty of time to more or less go sideways off and on before finally going up into a new all-time high. So I do think that's probably the most likely outcome, right? Just some consolidation with somewhat of a bearish bias for a little while. Eventually, it'll just be going sideways, and then we'll gear it for the next bull market around the next Bitcoin halving. And until then, it's just business as usual. And I don't really think it's worth overcomplicating things. It doesn't really need to be more complicated than don't fight the Fed, and the Fed's going to fight inflation until it starts coming back down. And we just printed 9.1% year over year. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and remember to check out the sale on Into the Cryptoverse Premium. Today is the last day to sign up, so make sure you do so at intothecryptoverse.com. You can keep the price as long as you do not cancel. You'll get access to, we have a website with a lot of charts. We have all sorts of indicators to look at where bottoms could be for Bitcoin, on-chain indicators, social metrics as well. It's kind of an interesting metric, ROI stuff, logarithmic regression. We put out 3 videos a week. We got a newsletter, etc. So make sure you check it out, intothecryptoverse.com. It's certainly not for everyone. If you have a smaller portfolio, honestly, you'd be better off not signing up. You'd probably just be better off doing whatever you're doing, like whether it's DCing Bitcoin or building a cash position, take advantage of the bottoms of the bear market and or the recession. But if you do want access to those tools, you can check it out at intothecryptoverse.com. All right, guys, I think we will wrap it up there. Make sure you subscribe at the very least. Give the video a thumbs up. I'll see you next time. Bye.